what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be going over all the dividends I received in the month of January 2021 and just taking a look at the dividend portfolio as a whole. So right now we're just going to look first of all at the spreadsheet before we make any updates for the month of January. As you can see, we own these approximately 20 positions, 21 I guess, and this is kind of a summary. Portfolio values at $2,023, annual income of $51.17 projected, and some other interesting metrics. Average years of increasing dividends across the portfolio, that's like weighted by position size, is 28.1, and average 3-year CAGR, dividend CAGR, is 8.35%, so that's awesome. And these are just kind of the equity by sector, if you care to look at that, and the dividend income by sector, if you care to look at that as well. So now we're going to go over to Fidelity and basically look at our transactions from the past 30 days. We want to make sure it actually says past 30 days, so I'm going to filter it out and just make sure that it's from the beginning of January to the end, which it will probably be, but yeah, that looks to be the right time period. So we're going to download this CSV file here just to our downloads folder, and that's just going to have included, all our past transactions. And then we're going to run our Python script here, and that's just going to open up a little dialog, and then we'll select that file that we just downloaded. And while this is running, I actually wanted to talk about something that I want to start doing, and that is to sort of, just continually buy my positions over time, even if they're not at the best valuation, because there's some positions in my portfolio that I haven't made any purchases of for like over a year. So what I want to do is every month just go through and look at all the positions, and if there's any that I haven't made any purchases on in over a year, then I'm just going to buy like maybe $10 or $15 more into that position. So these are actually my positions here in my Fidelity account, and what you can do is it shows your purchase history here. So basically, the Travelers Company, the last time I bought any shares of this was in June of 2021. So if we get to June of 2022 and I still haven't bought any Travelers because I think it's at a good valuation, then I'll probably just buy $10 or $15 of that. Another stock that we probably haven't bought in a while is Procter & Gamble. So yeah, this one I haven't bought since February of 2021. So in February of 2022, so this coming month, I'll probably just buy some shares, probably just $10 or $15 worth, just to continue adding to my positions. And this is kind of something that I guess is an idea that sprung from things PPC Ian, I heard him saying, where he was basically saying that it's important to continue to add to your core positions over time, because something like Procter & Gamble at this point in time, I think it's probably going to be like either overvalued or about fairly valued, by my estimation at least, for the next few years, unless there's some major crash, and that's just sort of I guess the nature of the market right now. And so some company like that, as my portfolio grows, I still want that to be a decent sized position in my portfolio. But if it's never at a good valuation, then I won't really have the opportunity to buy. So it's definitely not the absolute best strategy, because you're not getting a great valuation guaranteed on these companies. But at the same time, I do want to own parts of these companies, and I do want some of these companies to be a significant portion of my portfolio. So in order to do that, I just need to keep buying over time. So it looks like the script has finished running, and this month we deposited $76.37 of cash, and that is because we got some credit card rewards. So I think $45 of that was my normal cash deposit, and then I got around $31 of credit card rewards, so that's awesome. And some of this stuff was probably just like Christmas presents that I bought, and some of them I maybe bought partway with my mom, but I paid for it on my credit card or something like that. So sometimes I like having the credit card and just paying for stuff and having people repay me, because then I'm just getting some of the rewards. But going forward, we're actually going to be contributing $60 per month to the portfolio instead of 45, just because I think I'll have a little bit more income this year, a little bit more available to put towards this portfolio, and I just want to grow my investments and dividend portfolio even more. So the buys we made this month were Leggett and Platt. We bought about $25 at an average price around $37.76, which is pretty awesome. And JP Morgan, we bought $35 of that at an average price of around $156. We did not sell anything. And then we got dividends from 4 companies. JP Morgan, we got 78 cents from them. Cisco, we got 55 cents. And Leggett and Platt, $1.13 for a total of $2.46 in dividends this month. So we go to our transactions tab here. We can see scrolling down, we can see these all these transactions. We'll add a little note on this one, credit card reward. So we know, and it looks like I bought JP Morgan 2 times and then Leggett and Platt just once. And if we look at dividend payments, all these recent payments are just added in here. And monthly dividends, $2.46 here, which is much lower than the November and December months, but again, still higher than October, which was the last time most of these companies paid me. So that's awesome to see. These are growing over time. And on the quarter, obviously, this is the first month of the quarter and first month of the year, so not much to see there. And if we look at the changes over time and update this script or update these numbers here, we will see that our new annual dividends is around $53.18, which is awesome to see. And our 3-year dividend CAGR right now is around 8.4%, which is a little bit lower than it was before last month. But honestly, for me, that's definitely expected. Right around 8 to 9% is really what I'm happy with, I think. And so if it dips a little bit closer to 8%, that's totally fine. And if we go back to the summary page, we can see our portfolio value right around $2,100 now. And we already went over the annual dividend income and updated 3-year dividend CAGR on the changes over time page. And right here, this is our updated equity by sector. If you want to pause, look at that, or the dividend income by sector. Right now, we're about 10% cash. Hopefully, we'll continue deploying some of that, which our cash value is right around $211. So we'll continue deploying some of that definitely this month into those companies that we haven't bought in over a year. And the other thing I did want to mention is we didn't go over this at the beginning, but we had no dividend increases in the month of January, which is okay. Doesn't have to be every month, but hoping for the announcement of an Air Products and Chemicals dividend sometime soon. They should be increasing this quarter. So pretty excited for that one. Hopefully it's a good increase. Let's check what their average is. It looks like that their average increase over the past 3 years is around 11%. And I think that last year it was right around 11%, maybe 10.9 or 11.1%, something like that. So that's pretty awesome, and I'm pretty excited for that. So let me know how you guys did in the month of January, how your portfolios did, and how much income you did receive. And I just want to thank you for sticking around to the end of the video, and I will see you in the next one.